Hi! In this video, I want to showcase a position of mine that unfortunately wasn't recorded last week, but I'm making up for it now to show you what happened. On June 23rd, I bought a 155 call calendar spread with July 10th and July 17th expirations, 4 contracts at 0.32 each, on FDX. When I did this on June 23rd, the stock price was here. I was expecting a breakout and set my target price at 155, which was right here, up to this gap. Now, as you can see, it didn't break out on the 23rd. Instead, it dropped for about 4 days. Yesterday it came to life, and today it spiked big due to excellent earnings. It was obvious that the calendar was well priced due to the earnings, as I got it very cheap at 0.32 per contract. Now, after this spike, it's at around 1.25 per calendar. Ideally, the bid-ask spread may be a bit wide, but it's sellable around 120. So I'm contemplating that since I have 4 contracts, selling one at this rate would essentially make the entire position risk-free. I'm going to enter this live on TastyWorks and see if it gets filled. It's showing me 1.32, 1.30. After such a gap up, 2 things can happen. The stock can either continue its upward trajectory or have a slight pullback. If it pulls back to 155, that would be ideal, maximizing profit. So I'm going for it. The price has already changed to 0.95, it's very volatile. I'll try for 1.20. Let's see, now it says 0.95. Just a moment ago it was at 1.30, which I think is a bit unrealistic. Meanwhile, the SPX opened enthusiastically, then formed a small doji, so it may not be as strong and could pull back FDX. Now it's only at 0.75, so 1.30 is clearly unrealistic. Tasty shows only 0.58 for the mid-price. Here, the bid-ask spread is clearly at play, which is why I said 1.20 might be too much. Now it shows 0.88, quite volatile. I'll check the bid on the 155 for July 10th. It's 8.50, 9.50, $1.01 difference. And for July 17th, it's 9.60, 10.30. Both have $1.01 spread, which is extremely wide. Obviously, this is due to the spike. The mid-price is 1.05, now 1.07, 1.27. It's jumping all over the place. My limit order is in at 1.30. I would be surprised if it gets filled at 1.30, but I wouldn't mind as it would make the trade risk-free while still having a lot of potential. By July 10th, it could consolidate a bit, generate more time value, etc. If I sell it at 1.30, it becomes risk-free, but I could lower it to 1.255, which is still fine for me. Let's see if it fills quicker at 1.25. Okay, the order is in. The mid-price is now 1.10, 1.17, 1.12. Checking the FDX matrix, it gapped up and climbed, currently at 163. So far, the order at 1.25 hasn't filled, so I'll wait a bit more and then continue from there. All right, here we are again. The last time I recorded was at 4 p.m. and now it's 5:53 p.m. Had to wait quite a bit for the order to fill, but eventually it did. It dropped as I suspected. There would be a small relief, and I'll show you on the screenshot. At 5:45, about 7 minutes ago, it got filled at 1.25, at 155, a single contract, so I sold a quarter of it. Once again, what was the fill? 1.25? Yeah, that was the order. So from this point on, this is a pretty healthy trade, so let's see, can we lose on it? Yes, we can. Specifically, how much? 4 times 32, that's 128, so you can lose $3. So basically, this is a risk-free trade from here, and if it starts to range sideways a bit, you can realize up to a $500 profit, if the market allows. If we continue to skyrocket, well, we've cushioned the delta a bit. It's still -10, but much flatter than before. Earlier, it was negative 14, so it hasn't decreased that much. Now it's around -10, 11. So as time passes, it will nicely conform into the expiration, and somewhere around here is the target. Let's take a closer look. 379. Somewhere between 500 and 550 would be the profit target. Not bad on a 4x32 investment to bring in 600. I'll try to make it happen and we'll see what comes out of it. For now, it's been adjusted. Not much excitement in this position in the sense that it's risk-free. Obviously, there's risk involved, because if I close it now, it would bring in 340. So profit itself is a kind of risk, but it's manageable because the curve is nice and flat. So whatever surprises come our way, there's still plenty of room for profit. If you look at these adjustments, the exciting part is that you can go up or down 10 points. As you can see with these vertical lines, the position has slightly resized itself. But you see this 10% plus or minus, we're still well in the profit. Of course, not as much as if it stays right here or right in the middle, but it's still a solid position. So that's all for now. I'll continue from here. Back again. Just wanted to show you a quick thing. It's now 8:30 in the evening, and the price has nicely returned to 157. In this short time, the calendar spread has appreciated to the point where it could be sold for 1.42. You could exit the entire position now with a $423 profit, but I think it could still make even more, so I'm not closing it out. Just wanted to show that in just a few hours, the price has gone up, I don't know, about 20%. If we get a bit closer to 155, this will look even better. So I just wanted to quickly show how rapidly the price can change. I'll continue from here. Back again, there's been an adjustment in this position. The price has remained nicely at this level, just as I had predicted. Nevertheless, I decided shortly after the market opened to close out another quarter. I got 1.40 for it. Here's the credit. It's the 6th of the 7th month, which is today, at 3:47 p.m. Oh yeah, here's the time, forgot to put that out. It's now 4:02 p.m. So essentially I've exited another quarter out of the original 4. So currently, it's at a $426 profit. It would be great if it could range sideways a bit more, because I think you could realistically pull about $500 out of it, if the market allows. Now it's clear that there's no initial risk in it. Well, the floating $400 profit is the risk, because you can lose that at any time, which is why it's good to partially close out of a position, because you never know how the market will move, especially now that we're essentially in the last 5 days. This expires on Friday. Today is Monday, so just wanted to make a quick update. An adjustment has been made, only half of the position remains, so I'll continue from here. Alright, here we are again. It's the 7th of the month, and given that FDX has started rising again and moving away from the strike, it essentially means that we have 3 days left until expiration on Friday. So I decided to exit another quarter just now. Here's a screenshot confirming the execution at $1.50 for a quarter of the position at 5.29. Now I only have a quarter left, with a current floating profit of $432. Obviously at this point, the delta has flipped to negative. It's not exactly -8, but has become negative. Now, if we see a minor pullback, that could turn out to be a good thing. It really looks like it's moving upwards. At this stage, one could consider rolling a calendar spread, which I've demonstrated in several previous examples. The question is, at what price? For instance, I could do something like buying the July 10th 155, selling maybe the 160, although that might be too close. And then, for July 17th, which doesn't leave much time, I would sell the 155 and buy the 160. This doesn't really seem worth it. I've rolled up the 155 to 160, and the situation changes for a cost of $17. Now, if I roll it further to 165, which seems aggressive in 3 days, I get a $43 credit, but 165 is quite far away. However, looking at the chart, the pre-coronavirus relative peak this year was at 165, so it's a borderline case. If I do this, I get a $43 credit, and could potentially make around $550, which might be a bit optimistic, as this is a tight range. So we're currently at $430 profit. If we pull back a bit, I have a good chance of securing $500, but now $450 seems more feasible, which means there's another $100 to be made. It's a case-by-case decision, we'll see. This adjustment has gone through, and we'll see what to do next. If it continues to rise sharply, either I'll need to close it or adjust it. The more it rises, the harder it's going to be to roll, so that needs to be monitored. For now, that's the story. We're currently at $440 profit, and obviously it's a win-win from here. I'll continue from this point. Alright, here we are again. It's July 9th. and the stock price is beautifully centered. We only have tomorrow left until expiration, but we've started to see a pretty ugly intraday market drop. I don't know how this will end. Maybe we're just testing this level and the uptrend will continue. I have no idea. But given that we're on the penultimate day and pretty well centered, I decided to close it out at $1.80. I was watching the prices quite closely, and this seemed like a good move. I tried for $2, but it didn't get filled, and I didn't want to leave it open until tomorrow. So it got filled at $1.80 just now at 5:04, 3 minutes ago, and the last quarter got closed out. So, for this position, I had a concrete gain of $467 against an initial risk of $128, which is pretty great for a calendar spread. So it closed with a $467 profit, and realistically, I could have squeezed another $50 out of it to maybe reach $500. As you can see, $500 is pretty much near the peak. So there was a potential for another $50, but I didn't want to leave that for tomorrow. If some really bad news comes out and we open with a gap down, or even a gap up for that matter, the slope of this curve can get really steep, so you could lose quite a bit. I hope there were some useful insights in this video as well. If you have any questions, feel free to reach out. Thanks for watching. Bye.